All right. Good morning. So, welcome back to the markets. This is Engineering the Markets. My name is Jared, and it is December 1st, 2021. New month, new perspective on how the market has performed. We have information that we can start to assess as the month has closed. And ultimately, we've been in a period of higher volatility over the past couple of days. A lot of people have been sort of scrambling to assess their risk profile inside of their portfolio or inside of their sort of trade characteristics. We're also seeing lots of headline risk in regards to new variant information, along with simple testimonials from our FO federal chair, Jerome Powell, and Janet Yellen testifying to Congress and some of the volatility that took place in regards to their comments. But we are, as always, more or less technical traders. We're looking at macro, micro, we're looking at different opportunities in the market. And as we get more information, we simply assess that risk to reward profile and take a look and see where the risk is, where the opportunity is, and ultimately, can we step into that in a risk-controlled way? So as we have a month close, it's worthwhile to just bring up our S&P monthly perspective. And as always, we're looking at very significant information on this time frame. We're seeing how the month performed. We're looking at things like how the volume is either consistent, lack thereof. Are we seeing maybe some pivoting inside of the market, along with the perspective of that monthly close? And if we look into the S&P, we can see that the month started with a bullish thrust to the upside, but we're actually closing near the lows, along with closing below our previous month close, which is essentially an attempt for the market to start to pivot. In this time frame, ultimately we need to respect things like shorter term trend changes, looking for the market to either correct, adjust its value, or ultimately the risk to reward to the top side being somewhat skewed. And as we dig further, we can see some of that nuance taking place amidst this volatility. So now as we look at a weekly, we can see, of course, the past couple of weeks have been more or less to the downside. We've seen the market come off of an upper range. That upper range had an initial signal of potential weakness in the form of a false breakout. You can see how that looks on the weekly with this sort of flattened upper area, the market's inability to expand above this area, as we did have multiple weeks to the upside, and then that eventual pullback coming into the market. Now, perspective is important here. While the volatility may seem extreme relative to previous performance, we need to understand that all we're doing right now is back testing our previous swing high. And from this perspective, you can see that not only was the market a bit extended simply because we didn't have a lot of pullbacks throughout that 5-week breakout, but additionally, these back tests and these sort of checkbacks in the market are often how trending markets perform. They essentially need to confirm that whether they have gone too far, profit taking is beginning, and that back test allows for new participants who are looking for better risk to reward opportunities to step into the market. And that is essentially what we're getting. Now, as we look at our daily, that sort of kind of clarifies itself in regards to those two levels. We obviously were analyzing things a bit closer as we saw this false breakout. We had a possible swing low, and on false breakouts, the general idea is to target the bottom side or the other side of the range that you're trying to expand from. Often, depending on the size of the range, you will also have things like value, things like a central area of fairness inside of the range. And for shorter term trades, you can either target that mid to central point of the range along with the downside portion of the range. And then obviously, if you're in position, you look for that false breakout or breakdown attempt to continue further. So we're looking at multiple time frames here, and while the market may seem a bit chaotic at this moment, we've discussed how volatility brings out a lot of correlated events in the market, lots of gap ups, lots of gap downs, gap ups being sold into, gap downs being bought aggressively. And if you look at our heat map from yesterday, you'll note that the S&P 100 was pretty significantly correlated to the downside. In fact, one of our only green stocks on the day, outside of maybe some general strength inside of Tesla, the likes of Pfizer coming off of a previous swing low, and Apple, which actually made new all-time highs and has continuation into this morning session. But just understand that the market was not only very volatile to the downside, but imagine a market where Apple was also correlated to the downside. Essentially, without Apple, imagine how deep that pullback could have been. So it's a moment in time to reflect on your portfolio and just understand that while things are significantly bullish for a period of time, know what your downside risk looks like. Understand that in every trending market, there are going to be swing highs and swing lows. And as a trending market transitions from these areas, your best risk reward portfolio or position inside of that market often comes with pullbacks, essentially corrections inside of the larger trend. And as we are looking at this trend, we can see things like standard deviation channels, something that I don't necessarily pull up very often because depending on the time frame, it's a bit skewed. But ultimately, the market on a weekly perspective is simply oscillating between, in this case, a midpoint of the standard deviation, essentially the mean value inside of a dominant uptrend, along with oscillations between sort of the one standard deviation low and potentially the one standard deviation high, depending on how far back you go. Obviously, with COVID sort of resetting the market and providing that initial sort of anchor point for this study. Other ways to view this, of course, can be in the form of other sort of mean reversion type strategies. A lot of people will use things like linear regression channels. And when you apply these sorts of studies to your chart, you'll simply see that while the market seems drastic and dire to the downside and to the upside, it obviously depends on your time frame and your perspective. Oscillations between extensions to the top side, extensions to the downside, our September and October correction, a very significant buying opportunity, but we had to stabilize near an extreme. And that set the stage for us not only to return to the mean, but actually to extend a bit further, obviously leading to our current sort of one standard deviation back and forth test. No matter where you look, this is also true in other markets, although we do have other ways to sort of visualize this oscillation. The likes of the NASDAQ, very similar in regards to our channel-based structure. This has been the theme for the past couple of months. The NASDAQ seeing the best risk to reward coming off the low end of the channel, and obviously that lacking of reward near the top end of the channel with higher volatility and the potential for this channel to break out. Of course, if that were to happen, this market would become a bit more parabolic outside of what we're already seeing with that sort of shorter term volatility mixed in between. And as we go to our monthly, and as I remove these studies, we can have that same perspective on the NASDAQ. You can see that while these channel lines are a bit offset with the monthly perspective, we're actually looking at the NASDAQ trying to expand above this channel, and at least on the monthly perspective, failing to do so. That lack of expansion near the high, and ultimately setting the stage for either a shorter term correction or just a reassessment of value. Obviously, we're seeing a lot of shorter term volatility in regards to the bond market, which we'll look at in just a moment. And that does have some immediate effects on larger market cap names inside of the NASDAQ, along with the just perspective of valuation in regards to riskless assets or low risk assets versus these risk on inflationary type sectors, which we often look at from our sector overview. So looking at our NASDAQ, we can see that really over the past month, we haven't really performed too much in regards to bullish behavior. That monthly perspective, of course, being we did try to expand higher. We, of course, closed slightly higher from our open, but ultimately putting up a lot of upper resistance. And that can ultimately just set the stage for another back test of our channel. Being prepared for these events is what we often try to highlight inside of this morning show. And really the idea is simple: knowing where the best risk to reward exists inside the market and understanding that we're still in a bullish uptrend. Nothing really has changed over the past couple of weeks. We've simply seen a lot of shakeup and volatility amidst that dominant trend. And we'll be looking for that to either break down if it ever does occur, or simply set the stage for new opportunity on potential swing highs or just short-term bounce attempts. So as we look now at a new type of market structure, obviously our IWM is not a trending market. We've been talking about this extensively in regards to our dominant range. And when we look at the monthly, you can see just how powerful that range has been, not only for the entirety of 2021, but even on the most recent attempt to expand the range. That, of course, was on the monthly perspective, a false breakout look. So ultimately, this is setting the stage for some short-term volatility inside of the IWM. Obviously, as we just discussed, the SPY had that similar false breakout look. And whenever you have a range, especially a very dominant range that's well defined, any attempts to expand that fail, especially with something like a weekly or monthly close inside of the range, you need to anticipate the risk of coming back to the low end of the range at a minimum. Obviously, the IWM could continue lower if this is setting the stage for that final distribution inside of the range, and then the eventual turnover, basically providing the deeper correction. And once again, just looking at the monthly, we could see something like a back test of previous all-time highs. This is something that has not occurred in the IWM from a technical sense, and being prepared for that event, whether it be trading opportunity, hedging, or just looking at your dominant portfolio exposure, these are all things that are being set in motion at this time. So once again, our weekly perspective, that false breakout look with 4 weekly candles to the downside, bringing us back to value inside of our volume profile study. And then our daily, just looking at the nuance of what levels are important. We have things like our major buying climax or upper supply high, this sort of upper tests, these previous expansions confirming this as our range. And then, of course, our most recent false breakout, along with some potential swing lows. We have sort of shorter term lows that have been tested multiple times, along with our dominant range low, which essentially was set on the first climax of this market, but as of yet has not necessarily been tested fully on secondary attempts. We're seeing slightly higher lows on each attempt to break down. So with range bound trading, as with any other trending market, there is opportunity here. But knowing where that opportunity exists as both a bull and a bear is often how us as traders can take advantage of markets no matter their structure. Obviously, the NASDAQ and the SPY are uptrending markets. They have continued to defy logic and expectation for a lot of people and continue higher and higher over the rest of the entirety of this year. Whereas markets like these, our best attempts to make profit is to respect the trading range and look for moments in time where the trading range will fail, ultimately leading to these extensions. So obviously we had an attempt to break out, but as we're back into our trading range, we'll be looking at the same types of strategies, essentially buying this range low until this range fails to the downside and shorting or fading the range high from bounce attempts, looking at this range to basically be the dominant thesis for the remainder of the year. Now, that is not the only market that is stuck within a range. We often look at things like TLT just to get a sense of what the bond market is doing. And once again, on our monthly close, we can see, amidst some of the wording of these levels, the bond market has been quite bullish this month. In fact, we opened with a very minor bottom test, this slight bottoming tail, and we are closing near the highs. So no matter what you think about the bond market, there is buying occurring here. And that can be seen both on the monthly in regards to the expansion through this range, along with the relatively elevated volume to the upside. The weekly, of course, showing that volatility in between the monthly candle, noting things like our lower highs has been acting as a period or a spot of resistance, forcing this market into its range low, and then seeing these larger range reversals or transitions, high to low and low to high. Obviously, following up with our daily, as we did close with one of our highest prints on the entire month, we are back at our lower high. And more notably, the volume into this area has been increasing. So similar to what we saw with things like the dollar was a bit range bound before its most recent breakout. The likes of UUP, you can see that sort of volume profile inside of this range. What we need to be looking for is this market ready to expand? And essentially, is this range about to be violated to the top side? Similar to what we saw here as the bond market was threatening a breakdown, but obviously that turned into a reversal structure, the likes of a head and shoulders, or just a failed range expansion near the range low. So finally, let's look at some other markets just from that monthly perspective, seeing where money flow is heading into December. The likes of gold, we saw a bit of range compression over the past couple of months. The likes of these sort of inside candles, the lack of follow through in regards to making new highs or new lows. And then obviously on our most recent month, we had a bit of a failed expansion as we are returning back to our central point. These themes resonate in different markets, and just understanding the best risk to reward in regards to where to buy, where to sell, where to anticipate risk, knowing when your strategy is ultimately failing and your thesis is starting to break apart. This is often going to be based around structure inside of the technical charts, along with simple things like where is the highest volume. The likes of gold, we talk about failed expansions, regardless of if it's a flat upper and lower range or a range compressed sort of pennant structure. Anything that expands and fails to do so on higher time frames will often return to the mean. The idea of mean reversion with your best risk to reward as a short coming from those failed expansions or those upper tests, and then similarly best risk to reward, failed expansion to the downside, or lower test inside of a dominant distribution range. Gold with a very notable sort of standard deviation distribution looks very similar to any sort of bell curve that has formed on other markets. You can see where the value exists and where the market returns to in the likes of, I would say, lack of participation. So as we kind of just wrap up and reflect on the past month, obviously the volatility remains in this market. It's notable that the VIX has been oscillating between upper prints of up to 28, lower prints of 22. We've noted how that can affect things like short-term expansions inside of the expected move. We actually drew our expansion of the expected move higher based around that volatility contraction that occurred on on Monday. Now, what this did was it gave us a better risk level in regards to our weekly expected move. And I went ahead and moved that up to about 45.60 based on that new calculation. You can see that yesterday, amidst all of this selling, we actually touched this lower bound of the expected move on the week. So while this market may seem wild, in regards to the option market is pricing in this volatility and so far has been doing a pretty good job at capping that risk. So ultimately, if volatility continues to contract, we'll kind of see whether yesterday's low becomes sort of a sticking point for the market. Does fear return if we breach this low? And ultimately, if it doesn't, can we close at or near our midpoint on the week, basically where the market was able to close on Monday after our lower volume Friday sell-off? Some things to pay attention to in regards to whether this volatility should be respected. I like to look at something called the VVIX, which is just the volatility of the volatility index. The idea is pretty simple here. If market participants, large money especially, is fearful, they are often going to be hedging using volatility products. And when they do this, they are bidding up the volatility of volatility, i.e. they're paying premium to be hedged. And whenever you see something like the VVIX spike, especially in the past couple of sessions, we sort of cleared what I think to be more nominal. That's around 110 to 115. Anytime we see these spikes, the market is prepared for downside activity. There are hedging activities going on. And that is not necessarily a downside play. It is simply a volatility play, i.e. the market is wild in regards to its movement, and we're getting large correlated sells along with significant correlated buys on an intraday session. You can see what this does to the market overall, as we had moments in time yesterday where the market declined by multiple points in a period of just about an hour or two. The likes of the NASDAQ was ultimately more significant as the market came off of the 400 print and collapsed down to approximately 393 before seeing a bit of a fade and a recovery into the close. Now, ultimately, as directional traders, this can be challenging from a swing perspective. You're getting moves that basically stop people out. That volatility takes out a lot of shorter term traders with tighter stops, those who are not prepared for that volatility. And then, of course, next session, you see the opposite reaction. You see people who may be shorted into that weakness get once again stopped out to the top side. Lots of whipsaw, very large range expansion. And ultimately, the idea behind this week was to stay on guard. Allow yourself to be wider in your swing trades. Use options to define your risk. And with those option plays, allow yourself to cap the upper or lower bounds of your risk profile. Basically, go in with a defined risk strategy and allow the volatility to be your friend, as opposed to being short term minded and allowing that volatility to stop you out. Now, at the end of the day, the market is bouncing. We're seeing once again that gap structure where we get significant lows, significant highs. Market is a bit oscillative inside of this upper range, especially inside of the NASDAQ. We'll just bring up our moving averages to see over the past couple of days. If you're a moving average trader, you're probably struggling quite a bit because you're getting crosses back and forth, lots of big moves here and there. But on a day trading perspective, this has obviously been a bit of an advantage for us. We're seeing continuation if we get the direction right. If we have correlated selling, we ultimately want to try and step into that weakness, short the market during that time, and look for that correlated sell to end, essentially defining our targets. If you see correlated strength, especially today on a gap up, do not fight it. Ultimately, if the market wants to stop out any short-term shorts in the market, allow that to happen and look for where the capital flow is going. Yesterday, it was very obvious during those statements that the entire market was selling. This was people selling baskets, futures contracts, the entire market as a whole. And really, no matter where you looked, that sell was occurring. The NASDAQ and the Russell, especially, one of our more weaker markets, although there was a bit of support occurring inside of biotech. An interesting, I would say, green inside of a sea of red, or a floating boat, the likes of XBI seeing some recovery near the lows. But no matter how you're trading out here, just understand that this volatility is a condition of the market. It doesn't necessarily mean that things are about to fall apart, but during this phase, this week to 2 week period where volatility is elevated, you need to be thinking a little differently as a trader. You need to adapt to what the market is obviously providing in terms of whipsaw action, using that from a day trading perspective, and then for your swings or your option plays, tightening your risk, understanding that the market volatility can be your friend, but you have to be able to survive it in order to profit. So with all that said, my name is Jared. This is Engineering the Market. Fresh month, time for us to look back, obviously analyze our performance. What have we been doing right? What have we been doing wrong? Can we adjust anything before the end of the year? Obviously, everybody's looking for that final rally into the end of the year, the infamous Santa Claus rally. Whether we get it or not is going to depend heavily on what the current macro climate is giving us. And we've seen a lot of shakeup in most recent weeks. Obviously, still some risk factors on watch. Dollar continues to be on watch. Bond market as a risk to inflationary sectors continues to be on watch. Obviously, a bit of a boon for the NASDAQ or tech and growth stocks. And then finally, where is the market focused? Are we seeing moves into different asset classes? Something like Bitcoin, a lot of people are anticipating a more parabolic run inside of the crypto markets. You can see how significant these back tests have been. Is the stage set for this asset to perform? Obviously, the next couple of months will tell, as we're sort of back in that sort of initial trending structure, the channel, the trend line, everything's in place. Now we just need to see the participation. So with that said, stay safe out there. Stay tuned for pre-market prep, and we'll talk more tomorrow. Obviously, looking at bond yield inversion and that curve that we've been discussing, I think we're at a point to maybe dive into that a bit more, and ultimately we'll see what the market gives us today for new information. So trade safe, and we'll talk then.
All right. Good morning, everyone. Welcome to the pre-market prep. I hope everyone's having an amazing morning. Hope you guys had a great day yesterday. Good morning, Peter. How are you doing today, my friend?
Good morning, Carlos. I'm doing good. How are you?
Doing good, doing good. All right, guys, welcome. Let's see what our gapper list looks like this morning. We got a bit of stuff here in the green, looking very nice. 42%, 10%, one low float there, and a couple in the green. I see some travel companies in there as well. EV companies, things that basically are have been down the last couple of days. Very, very active with everything going on. You see CCL, the cruise lines there. I don't see any airlines. Where are the airlines? I don't see the airlines on here. But
They've
we'll,
flown
we'll
away.
yeah, I'm sure we'll get into those as well. And then a few things in the red, a lot of low flow stuff in the red this morning here, below 20 million shares flow. So we'll see what's happening there as well. So pretty good. And here's mRNA, of course, with some big swings every single day. Today they're down 3.4. I'm sure that is going to be in play. Taking a look at some of the stuff we had on our list yesterday, starting with mRNA. Let's focus in here. Let's look at our intraday charts for yesterday, 5 minute here with Dash Trader Pro. And if we zoom in here this morning, we saw the pre-market action was very active. Look at this insane drop yesterday and just the overall range on our mRNA yesterday, right? It's just insane. Again, good here, guys. If you're able to spot some of this bottoming action here, if you're able to, scalp this quickly for a drop below some of the lows of the pre-market, the low of the day, you got continuation. The key with these type of days is being able to manage your risk and know when to stop out if things are not going your way, because obviously the moves are very aggressive. And I'll show you a stock that traded very well yesterday. That probably Peter will be very happy with. Here, nice bouncing action to the VWAP, beautiful continuation, toppy towards the high of the day, and another nice drop here. Again, finding base. I mean, these levels here, by the way, finding another support area right at the around the low of the day here, where you saw great support and you get the bounce, right? It's just beautiful trading on mRNA yesterday after this initial drop, right? Here's Oxy. Oxy was not great, very choppy. Didn't like this one at all. CCL was decent, guys. You just had to survive this initial opening, right? You got to survive that. So this is why we tell people, maybe waiting 15 minutes, especially now when things are so volatile, could be smart. Could be smart. 15, 10 minutes, wait for things to settle down. There's a lot of volatility, a lot of indecision once this bell rings. And you can see plenty of stocks trading very well 15, 20, 30 minutes even after that 9:30 clock, right? So you can see here, nice drop here, does follow the moving averages nicely. Not the cleanest downtrend, but yet still a downtrend that you could take advantage of. Here's American Airlines again, that 15, 30-minute time frame, just every candle overlapping the previous candle. You're sitting here, you don't have no information up front, so you don't know what's next, right? This could be a nice long here for a continuation. This could be a nice drop for a continuation. Now you're not getting any of that until things settle down and finally pick a direction here. And we saw that great trading on American Airlines. Lucid also, again, popped up here, rough start, and then traded very well. And AMD was probably one of the most amazing stocks yesterday. Did take a while to get going, right? You had this whole entire area here where it was just indecisive as it's trying to break out and hit those all-time highs. But look at this beautiful drop you got here. You knew already, man, after trying so many times to get above this 164.50, right? You couldn't get above that over several minutes, almost what, 2 hours, hour and a half trying to get above that. Drops below the VWAP here. You get this continuation, just a beautiful drop on AMD yesterday. So again, one of the better stocks we had on our list. Peter, thank you so much for covering for Norm today. We know that Norm is traveling this morning as we get ready for our Vancouver meetup. What's the latest and greatest on the overall SPY this morning?
Yeah, well, first, we're all very excited about Vancouver. It's finally here. My goodness, when we first announced it, December seemed like a lifetime away, and here we are. Today, though, in the markets, with this first day of December, I'm waiting on the unemployment report numbers, which are supposed to have been out 15 minutes ago, but I don't see anything yet. We at 10 o'clock then have the ISM manufacturing and construction spending. Neither of those generally have an impact on the market. But at the same time at 10, Powell is actually testifying. Powell and Yellen are testifying on the CARES Act. So I don't know that we should really necessarily expect a market reaction to that. Besides, that testimony could go on for hours and they may not hit important stuff till like 1:30 for all we know in the afternoon. But I'm going to sort of keep an eye on the markets and see if we get any jumps as a result of that. Overall, look, the news about Omicron continues to make the markets jittery. So I would just say be cautious. If you were here, hopefully, for Engineering the Markets with Jared, he had some great advice about what we should be looking for in the markets right now and the caution that we should be exercising. So let's all listen to that. And in the meantime, let's find some things that might be moving a little better than others that we can follow today.
Absolutely. Let's get into our gappers list this morning. Gapping down, leading the way here, we have LMDX. Let's take a look at this. Let's get our charts to link up nicely here on trade ideas. So we'll bring this over and link our trade ideas and get this epic pen out of the way like always. Here we go. We're going to go to our external linking, add link, and get this all set up here. There we go. Perfect. All right, I'll move this out of the way now, and let's take a look here. So we have LMDX right on here. So this one at the moment, pre-market action. Hold on, let's zoom in. Yeah, so just started to get going, looks like, right? This is now 825. Yeah, so just starting to get going. We're seeing some volume coming in. We'll come back to that one. Let's give it a little bit of time to kind of do its thing here. LMDX.
There is news on that one. They have a fast track FDA approval for their COVID test. They were just sort of reissuing they're continued to be authorized even in the light of changes with COVID. So I think that's what's got its attention. It's not a low float. It seems like they've got a couple 100 million shares in the float. So I may take an eye on this if it continues to move nicely.
Yeah, sitting at 45 right now. I put in as a risky one because, again, it can move. So you still got to be very careful with it. But you're right. It's not a low flow sitting at 45 million this morning. CNTX, it is up 12.4. Let's take a look. CNTX looks like a recent IPO here, guys. Yeah, I'm not a big fan. It's a low flow stock sitting at 8.9 million shares. Again, it doesn't have great volume right now. I think we need to wait a little bit. It has ran up in the past before. I guess right when the IPO, it had a nice little run, a couple of days there. Did drop down since then and looking to kind of regain some of those moves there. So let's see.
Yeah, it's a very low float. I don't like the look of this one at all.
Yeah,
I can't find any
better.
news on it. Yeah.
ATNF here. They are up 8.8 this morning. Pre-market action is not looking great. Lower flow at 24 million, but I still think it needs to look better. So we'll skip on this one. AU, what is this? Gold, right? Yeah. So gold is up this morning. We usually don't put this on our list. If you like to trade gold, you can watch this one. Or there's many. I think there's better ones as well.
Yeah, this is actually Anglo Gold. It's a South African mining company. So they've taken the gold symbol.
Yeah, is the entire ETF sector running, or it's just this company for a specific reason? Do you know?
No, I don't know. It's a good question. Haven't checked.
Yeah, I don't see any other gold tickers on here unless I'm missing some. But yeah, we'll move on to CNK. Not looking good, guys. Very light volume, only 143,000. We need more than that. Here's Lee, which has been very active. They're breaking out nicely above this 36 mark that we had, our most recent high. I don't know if that's the all-time high. No, all-time high sitting all the way at 48. Something here. This was back in end of last year. Just madness there. This morning they have 789,000 shares traded. They could be very explosive. I am going to add them to the list. I know right now they don't look great, but they can be very explosive. So right now the action just popped up and it's kind of just hanging out here around 37.50ish or so. We'll see how that develops. AGC this morning. No, we had this on our list before, or at least looked at it. It doesn't trade very well. So I'm just gonna keep this off my list. I don't like the way this thing trades. You could tell by the daily too. Just look how nasty this daily is here. Heading down to CUK. Now I think we're getting into some of the travel stuff. So let's look at those. I prefer to look at CCL, which I'm probably am gonna have on my list. So we'll put on CCL here. Oh, you can look at NCLH, another one as well. This travel sector again, just taking a hit. prior to all the madness here with the COVID variant and all of that, they've been taking a hit, right? Right before the beginning of the month. So you see that there with NCLH. Let's take a look at American Airlines. I think this could be a good one today, bottoming down around 1708 and getting a little bit of a bounce here up at 18 this morning. I think that could be interesting. It's got great volume, 800,000 up 2.4. Excellent stuff there. And any other ones? United, maybe? Yeah, United could be a good possible. I do like to look at United. All right, we'll stop there. There's some more travel companies that you can look at as well.
Yeah, AAL was the best mover yesterday, especially into the
Yeah.
close. So that makes it look good this morning as well.
Yes. Yes. This is beautiful, beautiful trading in the second half of the day. I mean, the first half was not bad, but compared to the second half, yeah, it was just very, very clean, hitting the highs of the day there. Possible continuation today, guys. We're up 2.4 on this thing. Good volume. Definitely want to keep my eyes on that. All right, we got some EV companies coming up here. We looked at Leo already. I see we have Neo on here. They have 1.2. Man, their daily chart has been just brutal. Look at this here, guys. This is just has not been great. Definitely not the Neo that we've been trading in the past, looks like. But they do have 1.2 today. They are up 3.7. I just don't know if they're going to get a continuation breakout with all this resistance they have here. They can. I think it's worth putting as a possible at least because they have the volume. I see Fusa also on here this morning. They have 200,000 shares traded. Again, very light on volume in the pre-market. And it seems like the pre-market has been very light with volume for them in the last couple of days here. Yesterday, they did have a nice breakdown. But again, we have so many stocks that traded so well. I would have not taken the risk on keeping that one there. So I'm going to keep it off the list. Guys, we have a ton. We have BPs on here. We have Riot. We have Mara. Let's see what some of the Bitcoin stuff is doing this morning. Riot is up 3%. Mara is up 2.8. I don't see crazy volume on them right now. They usually trade heavy volume. Riot looks like a possible breakout here in continuation to some of these highs. Maybe a possible for Riot. I do like the daily on that one. Let's see Mara. Mara's daily actually is not bad neither. You're back at this area of support, so Mara could be something. We'll put it on here. We'll come back to that, and we'll stop here because if not, we will never end. This list is getting longer and longer. I know Twitter has been in quite a bit of some action lately. What's going on there? Yeah, I'm gonna say I knew it, like Brian does. I knew this thing was gonna drop yesterday. I mean, you just saw it. This news here, right back down to where it was. I knew it. And we usually don't say much that I knew it, but today we will. All right, so here's Twitter. Not much going on right now, but I think it can be interesting. We'll add it onto the list there. All right, let's Peter, what do you like this morning? Oh no, wait, hold on a second. We got to look at the gap down. BYSI this morning.
Halfway there.
Yeah, down 48%. Man, they are taking a hit here. Not a great trading stock right now, guys. Volume is insane. They got 2 million shares traded. It got halted probably for news, I would assume, because they usually don't get halted for volatility in the pre-market. So
yeah, they did have an announcement that they had a treatment that was not approved by the FDA. So that's never good news, of course.
Yeah.
So that's what's taking them down. Obviously, that implies they're a biotech with a relatively low float, around 12 million, I think. So
yeah, TI showing 20, but it could be lower than that, especially the way this thing is trading right now with this 2 million shares. I'm going to add it on here, guys. Definitely in play. We do have shares for short right now. Just be careful on that one. LGVN this morning, one that we have looked at in the past. Pre-market access is not bad on LGVN this morning. This is looking pretty good. 1 million shares traded. Daily looks very nice. You can see here we had a couple of runs in between here. Been kind of slamming down the last couple of days, but maybe it's trying to look for a bounce today. It is down 12.5. So let's see.
Yeah, they also had news. In this case, it's sort of a secondary offering. It's what's called a private placement. Essentially, they've agreed to sell $20.5 million worth of stock out of their reserve to a private organization at a price of $17.50. So whenever you do that, of course, that's dilutive to the valuation of stocks, or at least perceptively dilutive. So that's why we're seeing it pull back this morning.
All right, so we'll keep it on here. I'm not sure how great that is going to trade this morning. They are down 12%. PPSI, this has been active in the past. Right now they're down 11.7. We're not great volume for 4 million shares flow. Does not look great. ISPC this morning, getting some action here. They're down 8.4. No great volume on this one. Also, another low flow that has been on our list quite a bit, both on the upside and the downside of the gappers list. CRM today, this one has a good pre-market action. Now, I know this one doesn't trade very well. It's Salesforce, right? They can be very choppy, and their order flow is not great. But they have a good pre-market action this morning. What's the catalyst? Because that's the only time we look at these companies when there's something brewing.
Yeah, Salesforce, they only show up, you're right, every once in a while when there's some news.
Mm-hmm.
Well, let's see. They did have earnings.
Earnings looks like
Yeah.
earnings. Oh, earnings yesterday
So
after hours. Yeah. Mm-hmm.
yeah, so they had an earnings beat, but their forward guidance was lower than expected. So I think that's really what's driving it. Usually, it's that guidance these days that is causes a stock to drop. So
Yep, agreed. Interesting daily, right? They're slamming up against this area of prior resistance and some support, just getting slightly above that. So I wonder how much they're looking to recover if they can from this gap down. So definitely in play, guys. I like the catalyst on this one. It just comes down to how clean is it going to trade. We'll put it as a passo for now. LAC right at the moment, not great. We'll skip on that one. I just want to get here to mRNA. Let's see what mRNA is doing. And I think this is definitely a good one for today, guys. Pre-market action looking very nice here. We are down 3.9 and kind of heading towards this area of the low of yesterday, right? An area where we have seen great support resistance in the past. We draw a line right on there. You can see that 338, exactly where the price is at right now. Great area of resistance and support as well. So yeah, we're gonna add mRNA here. We'll see how that plays out. They're down 3.9 this morning. BNTX, we know it's a bad one. We're not going to spend time on this one. Peter, anything you like this morning?
two that I don't think you've mentioned, and Norm will probably be upset with me for mentioning both of them.
Norman's at the airport. Norman's at the airport.
Yeah, exactly.
Don't
He's not
upset
here
a
to
guy
defend himself.
waiting at the airport.
But he is the low float king. So,
Mhm.
but VBIV, Victor Bravo Indigo.
Victor Bravo, India.
Yeah, Victor.
Victor.
VBIV.
VVIV.
So
Here
they're
we go.
biotech, not a low float. They have a relatively high float, but they just got FDA approval for a hepatitis B treatment. So that's got them jumping up this morning on some good volume. Doesn't look bad. I mean, it is only a $3 stock, but it's okay if that's the type of thing you're following. I'm sure Norm would be all over that and already trading it. The other one is OP, and I'm mentioning it because I'm hoping that this is Ocean Pal Inc. recent IPO. Apparently, it IPO'd yesterday, but I didn't have it on any IPO list, and I went back and checked this morning, and couldn't find it. So I don't have no news. I don't know anything about the company other than it just IPO'd, and they've already got 6 million shares pre-market, up 76% from the close yesterday. So I don't know. Maybe this will be a mover today. We've got nothing, no history to go off of.
Yeah.
Oh my goodness. Well, he's
interesting,
starting with the puns, saying it sounds fishy.
Yeah, it definitely opened up very weird here around what 12 o'clock looks like. No,
Yeah.
not even. Yeah, 12 o'clock. So yeah, very strange. But yeah, we'll put it on here, guys. We'll put it as a possible. Let's see what that does today. All right, let's make some space. Let's take it to the room. Let's see what you guys like this morning. Starting with, let's go up here, scroll up, and we'll start with Amit K. What you got here for us? You got XPEF. Let's take a look. If I can type today. Here we go. Oh, no. There we go. XPEF. All right. So at the moment, we are up 2.8, 700,000 shares traded. I do like the daily on this one for a possible breakout, guys, right? It looks nice. We're breaking out already, but can we continue here? What does NEO look like? NEO, yeah, XPEF actually looks a little bit better on the daily. So we can actually probably change it,
I would agree with you. XPEF looks best from the EV stocks on the daily, but frankly, none of them look especially exciting.
No, it still belongs in the secondary list, if anything, at the moment. I have Lee up here because again, they can be explosive, but even them don't look great. XPEF does look good, though. I like this daily on XPEF a lot more than even Lee at this point. NEO we looked at. I'm gonna keep NEO off the list for now. and they got great volume, but again, just that daily looks a little rough. Hands, we do have Lee, we do have XPEV. Let's take a look at Disney and MU for you. I saw a couple of people throwing out MU. Also in our YouTube chat, I have a couple of people throwing out Disney and MU. If we're looking at Disney here, a bit of a drop. They're up 1.2. Great value, 1.3 million. Any news on this? Why they're popping up like this today, or with that volume? I don't see
What's the
any.
mouse up to today?
Yeah, I don't see
Um,
anything on here. So.
yeah,
Um,
I don't have any news on them.
mhm.
Disney continues to just confuse me. I can never figure out why this moves or how it moves, so I just usually ignore it, frankly.
Yeah, I
um,
agree. Very, very
they did have
strange.
a news article this morning that let's see here, blah blah blah. That they're increasing their spending, so they're leaning into things, despite the fact that subscriptions have slowed on the Disney Plus, which, if you remember, that was a big drive for them a little while ago.
Yeah,
Looks
yes,
like they're
yes.
going to increase spending on programming. So we'll see how that has an impact. But anyways, maybe that's why it's moving.
Yeah. We'll keep it as a possible. Might not stay there. I like the value 1.3. I just don't know how great that's going to trade. Let's take a look at MU. A lot of you guys throwing this one out here. I do like the daily here, guys. Possible breakout on MU. That looks great. But you know what? And they got good volume today, 1.1 million. Usually a little bit higher. Although I'm not seeing how this volume is trading here in the pre-market. Maybe a couple of block trades that are not being recorded here. Not sure. But if I think about all these semiconductors, my go-to is going to be AMD. They have been just amazing. Even with this not so great pre-market action, they find a way. They've been finding a way how to just get continuation moves. I mean, it's just they've been so good. And Peter, you
Music
would
to
know
my
because
ears there.
yeah, you would know because you watch this one on a
Well,
regular
and
basis.
the only thing I would tell people is AMD, be patient. You if you're really good, I guess you can get trades on the open, but just look at AMD yesterday. Very, very choppy at the open. You had to wait for it to decide what it's going to do. Once it did, what a fantastic move. But
Yeah.
don't rush into it, especially if you're not quite sure what's going on and you don't have a strategy for it. AMD can be tricky. I think that's why a lot of people end up disliking it or moving away, because it can be rough right at the
Yep.
open.
I agree 100%. Norm is giving us Lucid, and he's right. Lucid has been very, very active and explosive, probably better than Lee this morning. And their daily looks better than probably very close to XPET's daily too. So yeah, I think I'm gonna bring down Lee, and I think Lucid will probably be one that I'll add on this list here because again they just seem to be better. We'll take off Lee here. That's questionable. XPET does look a little bit better on the daily, so we'll keep Lucid on here. Tesla, Fabio, you're giving us Tesla this morning. Tesla is another one that you can watch as well. I prefer to watch Lucid, Lee, or even Nia when it's in play. Nvidia has also been very good, guys. This morning, their daily also very nice here for a possible breakout if we can get going. And this is also, trying to slam up against these all-time highs, right? So Nvidia also very, very good at running out of space here. But you know what? I know I'm going to probably drop off CRM. I'm probably going to drop off Twitter if they don't get volume. There's a few of these I'm going to drop off. So I am going to add NVIDIA on here. All right. We'll stop here, guys. Let's take a look over on a couple of our YouTube chat. And I see people throwing out the AMD logos for you, Peter, there. Very nice. And let's go over to our YouTube chat. We have Apple from Tempo and Puppet Master. Let's see what we got going on there. Wow, big move. Wow, big move on Apple yesterday. I didn't see this. Hold on. Wow, I did not have. Did I have Apple on our list? I don't think we did. Maybe it was Apostle, but man, huge move on Apple yesterday.
Yeah,
Um,
Apple, and we were talking a lot about Apple, especially Jared. He mentioned it
mhm.
again in Engineering the Markets this morning,
Yeah,
where
yep,
it really was supporting the market. While everything else was dropping yesterday, Apple went up to a high and then sort of held that level. So, yeah, I think it obviously was strong in the face of falling markets. We'll see if it can sustain that today. Like you just never know with Apple.
yeah, I agree. Looking very good, guys, right now. I mean, they're hitting. This is their all-time highs, right? Yeah, they're doing it in style. They're up 1.4, 3.8 million shares traded. Just be careful, guys. There could be some chop this morning at the open. You might want to wait a little bit, but definitely a stock that is in play. Two more, guys, and then we'll head over to announcements. WMS, no good, Santo. WMS, no. Let's go to
No.
GS. Goldman Sachs typically doesn't trade well. Anything exciting happening? No, I don't see anything exciting there. Anything on the banking sector? JP Morgan? No, nothing good there. I see BLFE COVID play. No, I don't see anything good here neither. So I think we have enough, guys. It's a lot on here. Your list could look completely different today. You might be filtering some stuff based on what you like, what you're comfortable with. Maybe you like this stock better than this one just because of the name. You could do that today because there's just so much to watch this morning. So with that said, let's go over to our community events and announcements. And then right after that, Peter, I'm going to do you a favor. I'm going to remind you, we do have Creta, so you're not surprised. And
Yes, indeed.
we'll come back and fine tune this list.
Yeah, I need that reminder. All right, last night we had a great series of webinars. Speaking of Creta, she was presenting earlier. We'll talk about that in a second. And then followed by Joel. Joel was talking about his data-driven trading. He has been trading for a little over a year now and keeping meticulous statistics and data, and shared that with us in the outcomes. Has some fantastic results in his trading methodologies, and it was a great webinar. He was feeling Murphy's Law, right? He had the smoke detector that was beeping off in the background that was driving everybody crazy, but it did not detract from the strong messages he had. So that recording, if it's not already available, will be available soon. And that'll be up in our education center. As I mentioned, Creta presented earlier in the evening last night, and it was a great session. She had four different members on who she's taking through a coaching program live in front of you. So you can actively participate. She gave a series of homework that you yourself can do. If you weren't there live, go back and watch it. It is a fantastic series and a set of information that you can take advantage of. I love what Creta does. I personally have benefited from her mentorship and coaching, so I strongly encourage you to listen closely when Creta talks. She always has great advice. Next week, we'll have Dr. Kenneth Reed back to do part 2 of his Keys to Consistency series. That will be at an early time, 5 o'clock next Wednesday, the 8th of December. So hopefully you will join us again for that. We've been talking to you, all last month, and this is last month, we've been donating to the Alzheimer's Foundation. Thank you for all the super chats and the donations. I know Jared came in with a big one yesterday that we will, of course, match as always. He loves it so much, he pays for the privilege of being here. You got to love it. So thank you, Jared, for that, and for everybody that donated and gave us a super chat or a super sticker. For this month, I don't know, Carlos. Do we know what December is going to? Who our
Nope,
charity is?
I do not know, but I know. Oh, here it is. Hold on a second. We do have it. So Norm coming in with the $50 bomb. What a perfect way to
Whoa.
announce this here. And what we're doing is we're kicking off donations for December charity. Stringer's Hospital for Children, helping kids with really bad health problems at no charge to their families. So wow, Norm, thank you so much for that. So $50 bomb there to start off the month this December.
Wow, look at that. So a fantastic way to announce it. So, all right, you heard it here first. So that'll be great. As we've been mentioning for the last couple of weeks, we really encourage you, leverage our stock trading simulator. It's completely free. You don't get marketed to. There's no other information. It's just a simulator that we want everybody to use so that you can sort of test out your strategies in the market and have a free access to start your trading journey. Or if you've been trading for a long time, there's still a huge value in going there and sort of testing and regression testing all the stuff that you're doing. So go to stocktradingsimulator.com and you can get free access to that. We've been having a discount for a while. I think Norm mentioned yesterday that yesterday was the last day for our Black Friday discount. But being that we still have it on the screen, I will promise you, if you sign up today, we will make sure you get that discount. Use the code BlackFriday45. If it doesn't work, you email me personally, peter@bearabletraders.com. We will make sure you get that discount. So sign up today, before it's too late. But if you don't want to make that long-term commitment, we fully understand. Why don't you try just joining for a bit and see if this is the community for you? We do a lot of great stuff all day. We trade live, market open to close. Use the code premarket24 to get a discount off of our 1-week trial membership. We promise we're not going to convert it to something else. We're not going to force you into a membership that you then have to cancel. Completely up to you. Try it. If you like it, then you can go and take the step to sign up. All right, so hopefully we'll see you in the room. And if you're new in the room, why don't you say hi right now? Give us a little hello if you're new to the Bear Bulls trading room. We always like to say hi. So I see Ruth and Matt, Tommy, Ruben, Chester, Beldar, Hankway. Oh my God, they're moving too fast. Look at all the new people we have in the room. So Logan, Ray, and all those that I've missed. Welcome. We're so happy to have you here at Bear Bull Traders. So fantastic stuff. Welcome, everybody. All right. And as Carlos mentioned, it is Wednesday, which means that on our Wisdom Wednesday, we get Creta, who's going to continue spewing the knowledge at us. As I mentioned, last night, her webinar was fantastic. Today, she's going to be talking about taking the pressure off ourselves and the importance of going back to basics. So good morning, Creta.
Morning, Peter. How are you doing?
I am full of energy this morning and very excited. So
awesome. That's a great way to start December. I like it.
Isn't it? I think so. Anyways, over to you.
Thanks. So that actually is nice energy to bring into what we're talking about today. And I'm not kicking asses today, you'll be glad to know. I'm actually talking about taking the pressure off yourself. And I think this is good that it started on a Wednesday, because Wednesdays, it's Wisdom Wednesday. We're talking about the person rather than the performer. So what we're going to focus on for December, we had our theme for resilience in November, and everything that we covered contributed to resilience. But for December, we're talking about taking the pressure off yourself and actually enjoying your trading. And that sounds very simple, but it can sometimes be hard to do if the results are going against you. So for this whole month, we're going to talk about different ways that you can actually bring this into your trading, this kind of sense of enjoyment and focusing on the present and not getting overwhelmed, trying to do all the things, work on all the things, fix all the things that are going wrong, and just kind of strip it back. So we'll keep this theme going throughout December, but we'll just start off now by talking about the pressure that people put on themselves. So obviously there is pressure inherent in trading. It's naturally a risky business to be in. So that's a given. However, what a lot of people do is they heap the pressure on top of themselves. So on top of that inherent level of risk, they're actually creating more pressure for themselves. And when you do that, you are increasing your likelihood of deviating from your trading rules. So that's something that's within your control. So a shift in how you are approaching your trading, so coming at it from a more self-compassionate mindset and a mindset of trying to enjoy trading every day, as opposed to always being in the mindset of pushing, striving for results, that can actually take the pressure off. And ironically, it can actually elevate your trading results. So I'm not trying to trick you here, but it is something that if you can actually come at your trading from this mindset, you'll overall have a much greater experience from it. And so what are we talking about when we're saying stripping it back to basics? So people can get overwhelmed when they're tracking tons of data. They've loads of aspects of their trading that they want to fix or work on at any one time. And so if you can actually pull your focus to a few key things that you're trying to improve or focus on, that can help you to give all of your attention to that, take away the sense of overwhelm, and it can actually help you to improve those aspects of your performance with much less effort. So we're going to, at the end, I'll just have a little way that you can do that today in your trading to try it out. So bringing it back to basics. But in terms of the pressure that people are putting on themselves, because December is year end, people often find themselves in a position where they feel like, you know, I set these goals at the start of the year. They were really lofty, ambitious goals. And this might relate to your trading or to your, personal life or anything else in your life, hobbies, whatever else. So maybe you've set yourself high goals and now you're coming to the end of the year and you're actually assessing, well, where am I against these goals that I've set? And if you're someone that puts a lot of pressure on yourself and pushes yourself to achieve and expects a lot of yourself, you might find that actually currently you're falling short against those goals and you're feeling the pressure heightened because you want to meet them before the year ends. And that can especially happen in trading. So let's say you had some sort of financial goal that you wanted to make this year. And if you're not close to it, or if it seems like you're not going to hit it, you might be tempted to heap the pressure on and try and push yourself to achieve that in December. And I'm actually saying that try and do the opposite. So try and focus on enjoying the process throughout December. So I'm going to set people a challenge. And if you want to do this and follow along, it'd be brilliant to hear your experiences at the end of the month. But I'm actually going to ask people to track your level of enjoyment of your trading that day. So every day that you trade in December. So you're going to track it out of 10. 10 out of 10 is pure enjoyment. You know, I'm really like, no matter what happened with the results, I really enjoyed the process, or I can find things in my trading today that lit me up. And that's a mindset that you can cultivate. It's like gratitude. It doesn't necessarily happen automatically. But when you give your attention to it and you're actually looking for the things that you enjoy in your trading, then you'll increase that sense of enjoyment and happiness and the focus on the process rather than the outcome. So if people want to do that, do it for yourself, track it every day, work out your weekly averages. And then at the end of the month, I'm just going to put it out on Twitter, or we'll talk about it here and see how people got on. So by focusing on your enjoyment, were you able to actually cultivate a greater sense of enjoyment in your trading? And then just ask yourself, well, you know, at the end of the month, what did that do to my pressure levels? So did it actually take the pressure off me a little bit? And the reason why I'm suggesting doing this is because people can get stuck in driving and striving and always thinking that happiness and enjoyment comes when success is hit. But the problem is when you're a high achiever, you hit your goal and then you just set a new one. So the goalposts always change. So you're bringing this mindset of, I'll be happy when I reach this, but then you shift the goal set and you never reach it. And so that's a mind frame. So what we're trying to do now is shift into a different gear for December, but hopefully if it works and you like it, you'll keep it going. So taking it into this spirit of enjoyment rather than pressure, and understanding that even if you have lofty goals to hit and you haven't hit them yet, there is enjoyment and happiness and a sense of success to be taken from trading every day if you force yourself to look at it, if you actually search for those things. So my last two pieces then, so some tips for today or actions that you can put into your trading today. So the first one is to choose one thing that you're going to focus on in your trading, to not the exclusion of everything else, but to really give it your key focus today. So set a goal for yourself and say, that piece of my trading I'm going to do to 100% today. So it could be only picking your A+ setups. You know, it could be maybe I'm going to be really focused. I'm going to have 100% focus, whatever it is. And then the second piece, in the spirit of not taking yourself seriously, is to, and not everybody has to do this, if it resonates, feel free. Think of an animal that embodies the essence of the way you would like to trade. So maybe if you're someone that's trying to push yourself to stay in trades longer, you're a shark that's hunting for all of the profit. If you're somebody that needs to boost your confidence, so you want to build your confidence in your own ability in trading, maybe it's the type of essence of a lion. So you're just going to think of an animal that reflects exactly how you want to trade, and you're going to bring that into your trading today. And the last thing I'll say is just probably don't choose the chimp or the adrenaline ape, because that may not work out so well for you.
Wow, I love that. You know what? I've said forever I'm the crocodile, because I think of myself as the crocodile in the watering hole. I've got to be patient until the right opportunity arises, then I strike. So I love it. So I will channel my spirit animal, the crocodile.
Love it, Peter.
And great advice there. You know, you're right. We do tend to put a lot of pressure on ourselves to try and achieve, and sometimes it can be completely unrealistic. You cannot make up for an entire year in the last month, and to do so usually brings you farther away from the goal rather than closer. So everyone, great advice from Creta to say, you know what, maybe we should focus on the enjoyment, because often the journey, you know, is the point. So let's focus on that. Let's see what enjoyment we get. And yes, let's see you in Twitter and tell you how it goes as we progress through the month. Thank you, Creta.
Awesome. Thanks, Peter.
All right. With that, let's get to setting some levels, and then we'll see what our moderators have for watch lists, and we will get to the open.
Absolutely. So, guys, if you missed some of the action, so here we're having a little bit of fun over on Twitter. I mean, not on Twitter, on YouTube. Here's Norm with his donation advising what charity of the month we're donating to. And then Jared comes in and beats him by 1 cent. So he's like, let's do it again. Also, 1 more cent than Norm. And then I try to be slick, but the app would not let me do $50.01. It's just lets you do $49.99. So I couldn't do it. I could not come through and beat Jared, so that's okay. He's still the champ this morning. Guys, over on YouTube, please hit that thumbs up and shout out to Kreda. She's been doing such an amazing work for us in the community. Yesterday we had an amazing webinar, which the recording will be up later today, and some of our members there, as you were mentioning, Peter. Again, just a lot of good information, and cannot wait to see them come back in a couple of weeks and see how they implemented some of the stuff that she provided them with. So that's going to be a whole lot of fun to see the results. All right, guys, let's get to it. We have our list here this morning, starting with CCL, looking very nice. Great stock the last couple of days. American Airlines is good as well. Pre-market action is not so great. We do have amazing volume, so hoping that's going to continue there. mRNA also on the daily looking very nice, guys. It looks rather weak this morning, down 4.5. We'll keep that on there. AMD has been just incredible. Lucid has been explosive. That's good. And we have Apple right now with 4 million shares. Come on, Peter. What are you doing, man? So Peter's showing me that his app allows him to do 50.01 there. Challenge accepted.
Right.
That is great. All right, so coming over here, guys, Apple looking very good. An explosive day yesterday. Looking forward to that one. We have 1, 2, 3, 4, 5, 6. That completes our 6 there, and we are set to go. We have our secondary list there also. Guys, we're running short on time, 9:13. I'm going to do levels probably until Andrew comes on. Once he comes on, we'll continue in YouTube if he is on and ready to go. If not, we will finish off our levels because we are running into the time frame that him and Brian do come on to trade. A high of the pre-market here on a CCL 1833, so we'll slam a level right up here. That is good there. Towards the bottom, guys, plenty of levels here. You can see here the levels we had yesterday have become some of the highs and lows of this chart here for the last couple of days. So that's looking pretty good there. I don't think you need to add anything more on CCL, so that was easy. Move on to American Airlines here. American Airlines, let's remove some of the levels might be overlapping. High of the pre-market is at 1817. Low of the pre-market sitting at 1783.82 to be exact. And that's all you really need. You're pretty much set here. I am going to mark down this the next level of resistance we might come across in case we do break out of this 30-ish area, 1823 right on here. In case we do that, we do have 1864 seems to be the next area of possible resistance if we can get to it. All right, mRNA here, guys, looking very good. We are up 4.1 on mRNA. Low of the pre-market is sitting at 334.51, so we're slamming level there. And then towards the top, guys, plenty of highs and lows from the last 2 trading days right on here, looking pretty good. Tons of areas of resistance. You do not need to add any more level towards the top here. You can get fancy and you can add this pre-market high over here at 348.87. I would prefer to mark this one, right? Because this one here, this 345, one is a whole dollar number. And you can see in the pre-market, you're getting a lot of attention on this here, a lot of resistance when we had the actual breakdown there down to that new pre-market low. So that's good. Towards the bottom, if we were to break down further from this 334, we do have a nice area here around 321. And then obviously this one all the way down here at 226. I don't think we'll get there, but the way this thing has been moving, I would not be surprised if it can drop here. AMD, guys, here looking very good, surrounded by the highs and lows of the last 2 trading days. The only thing you need to mark down really on this is just the high of the pre-market. I think you're pretty much set here when it comes to AMD. You got plenty of levels. Heading down to Lucid this morning, looks very good on the daily. Possible breakout. High of the pre-market. Let's get rid of some of these levels here first. High of the pre-market sitting over here at 54.48. The low of the pre-market down at 53.30, and I think you're pretty good there, guys, as far as that. Surrounded by the highs and lows of the last 2 trading days. Here is Apple. Apple, guys, looking very, very nice this morning. All-time highs on Apple, 167.95. Man, what a run this stock has had. Low of the pre-market, 167. 167. Is it here? 167.95. Yep, right on there. 167.95, low of the pre-market. And that's all you really need to add on Apple, guys. Below that, you do have your highs and lows from the last 2 trading days. Just look at the run Apple has had since October. Just amazing. All right, guys, we are all set. That is our watch list. Let's take a quick look at our moderators lineup. I'm going to bring this over. Guys, over on YouTube, help us get to How many likes do we have? Just quickly here, 125. I'm gonna like it myself as well. Show some support to our channel. And if you could do that on your end, I will highly appreciate it. If we can get to 250, that would be amazing. Thank you so much. All right, as I'm doing this, let's resize this. See what the moderators lineup looks like this morning. See what our guys like and gals like today. Disable this, and we'll bring this right over here. And just one sec as I move this over so it looks pretty for you guys. And here we go.
We
And
like it
now,
pretty.
yes, like it pretty, simple, and fast if we can. All right, here we go. Amen, a couple of longs, Ford and AMD, potential shorts, BP. Peter, no IPOs for today. A couple of SPACs you're listing there. John is looking at Apple and AMD, both very, very good this morning. Top selection there. Dima has Apple, AMD, XBEV, and Twitter. Jared has a couple of things that he's looking for this month. His watch list, Riot, mRNA, and Tesla. Tiffany's looking at Apple, mRNA, and CRM. And Peter, your list today, AMD, mRNA, Apple, American Airlines, OP, and BYSI, which those two there are going to be interesting for sure, especially that BYSI there. All right, guys, that is our list for today. Thank you so much over on YouTube for joining the pre-market show this morning. Appreciate you guys very, very much. Please hit that thumbs up. Subscribe if you have not done so already. We are live every Monday through Friday here and Monday through Thursday with Engineering the Market. So we appreciate you guys doing that. So let's see. We have 235 likes. We just need a couple of more, guys, for 250. If we can do that, we'll be very happy campers over here. So thank you so much for that. So 235. Going once, going twice. Let's see. Looking good.
Oh, good where I could. I hit the button.
Looking good. 241. 9 more. Can we get 9? I feel like I'm auditioning a car here or something. Let's see. Refresh. There we go. I think we got it. Thank you very much. 270. Wow, you guys are very generous. Got us over that by 20 likes. Appreciate you guys very much. Guys, have a safe trading day. We will see you again tomorrow. A couple of the moderators are traveling today over to Vancouver, looking for that amazing meetup. Trade safe, guys, and we will see you tomorrow at 8 a.m. Tonight we have what's the webinar tonight? We have what's the webinar?
Tonight? Well, we don't have one tonight because we moved it to yesterday, right?
Oh, that was Creta yesterday. All right, so no webinar tonight, guys. You guys have the day off tonight, the evening off tonight. We'll see you guys in the morning. Take care, guys. Trade safe.
Trade safe, everyone.